please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the other big news that came in the dying hours of market yesterday was that Chinese banks have filed a suit against Reliance Communication in the NCLT, or the National Company Law Tribunal. According to various bankers, Chinese lenders account for around 45% of the loans to Relcom. But Nisha Podar, who broke the story for us, is here with the details.
Pressure is clearly mounting on debt-laden Reliance Communications. Sources with direct knowledge share that a large lender for Reliance Communications, that is the Chinese consortium of lenders, has really gone ahead and filed a case against Reliance Communications under the NCLT. They want, as sources suggest to us, the Chinese lenders want the entire debt resolution of Reliance Communications to be done under the Insolvency and Bankruptcy Court. So that's the main idea for going to NCLT. Now, remember that out of the 44,000 crore rupees of debt pile on Reliance Communications, and with some of the resolution efforts in the past failing, like Aircel merger not going through and the tower sale to Brookfield not seeing any headway, the lenders are clearly jittery at this point. Now, remember, when we are talking about the Chinese lenders, these are China Development Bank, Industrial and Commercial Bank of China, the Export-Import Bank of China. So these are the participants of the Chinese lenders consortium who have gone against Reliance Communications to the NCLT. Now, of course, it needs to be seen whether the case is really admitted by the NCLT going forward or not.
Okay, thanks a lot for that, Nisha. But we also picked up yesterday, Ritu Singh, my colleague, reported that bankers are not very willing, that Indian bankers are not willing to accept the Chinese demand. They are claiming, according to Ritu Singh's sources, that this is anyway, solution is underway under SDR, and they would keep it out. And they are, as the dominant party in the Committee of Creditors, their voice will stand. So we'll still have to see how the NCLT reacts.
Okay, well, the plot thickens for Reliance Communications. Let's now go across to Ronit, who's got some other interesting stocks and news worth watching out for this morning. Ronit.
So I'm going to start with IDBI Bank. So the company yesterday decided, as part of a strategy to divest its non-core assets, they've decided to sell around 1.5% stake in NSE, which is valued around 750 crores. Also, they've decided to place their life insurance arm, IDBI Federal Life Insurance, as well as their trusteeship company on the block. Remember, in Q2, the company reported its highest ever loss of around 6,500 crores. So you can expect a slight uptick on the stock today. Moving on to UFO movies, SBI Mutual Fund have decided to sell around 2 lakh, actually sold 2 lakh shares at 458 per share. Remember, they hold around 9% stake according to the latest SHP. Moving on to Rallis India, green on that stock. Franklin Templeton has bought around 17 lakh shares at around 230 per share. You can expect a green on that stock.
Okay, all right. Thanks, Ronit, very much for that. So let's quickly recap our list for the morning. Stocks that could see that could see some pressure today. Well, there's a lot of action on that front, so we'll watch out for the Nifty Bank, the PSU Bank Index, HDFC, Bajaj Finance, Indiabulls Housing, and of course the entire real estate lot: Brigade Enterprises, Puravankara, Kolte Patil, DLF, more importantly, Suntech Realty, Oberoi Realty. PNB Housing, UFO Movies and Reliance Communications are also on our red list. Stocks that could see some green are UPL, Tata Investment, IGL, Mahanagar Gas, Gujarat Gas, Eris Life Sciences, Aurobindo Pharma, PNB, IDBI Bank and Rallis India.
SGX Nifty is indicating that we may once again fall into that range. Of course, the cut is not as sharp as yesterday, but 22 point lower is what we have on the SGX Nifty. Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar now join us. Good morning, gentlemen. Ashwini, what's the first trade and what's the big trade for the day? Do you again trade the boundaries, buy the dips, sell the rallies, or is there a different trade today?
Well, good morning. I don't think today the decline will quite take you to the lower boundary. What I am looking for today is that can the price hold halfway through the range, which means that can the Nifty futures hold 10,380, 400, and if the Bank Nifty can hold say 25,870, 880, then maybe a trend may be in the offing. So prima facie, first up, I will buy at these zones, expecting that possibly the upside bias is bigger than whatever dip we are getting. But that can fail, so that needs to be kept in mind. But my sense is, given yesterday's rally, I think the lower boundary is pretty much secure.
What would be, good morning, Ashwini, what would be the stop loss for that trade? The buy on dips?
See, 870, 880 on Bank Nifty futures.
Okay.
You can put a stop, say 25, 850 thereabouts, because the whole idea is that I'm expecting that we don't go all the way down, but we go only halfway, and from there we bounce back, because yesterday's move showed you that some sort of trend may be on the way.
Okay. Good morning, Sudarshan. You take a position long as well?
Yeah, good morning, Latha. Well, the markets are in an uptrend. The 5 days of range that we are seeing in the markets apparently seems to be absorption. Absorption takes place when a rally comes about and then markets go in a range. All the selling that is coming from the bears is absorbed by the buyers, which is what is happening. Lows are not being broken. The previous lows are intact. The markets are just not going up. It's a matter of time, I think, before the bears get tired. Their selling is absorbed by strong buyers, and this market will break on the upside. I'm still looking for lifetime new highs soon enough. So the positional longs, the swing trades on the long side are intact. And if you still, I don't know if anyone doesn't have a position, but if you still don't have a position, go and buy now.
Fair enough, Sudarshan, and that's what's been happening. It's been gradually trying and testing us, but creeping higher nonetheless. Where should stops come in for the long trade now?
Oh, for the Nifty, the stops are now 10,300, and for the Nifty Bank, it is 25,500. I do not think we are going to reach these levels, so there are some kind of catastrophic stops. If they do come about, that would be a pity.
Okay. Venkatesh, good morning. How would you approach the day today?
Good morning, Anuj. So I've been talking about this being some kind of an upward drift without very strong momentum, but I think that drift still continues. So the idea is to keep looking for intraday declines like we got yesterday and we've been getting for the last few days, and buy near the support level so that your risk reward equation is quite favorable. I think currently the 10,320, 330 zone is the area where a lot of intraday averages are converging, and that's the important support zone. So anything close to 10,350 for me is a buying zone. On the upside, I think eventually we will head towards 10,480, 490, and that could be an area where we could see some kind of stronger supply emerge. So for the time being, trade with the indices on a very short-term basis and look for more stock-specific ideas.
All right. Well, with that, let's start with stock ideas. Ashwini, what are you trading this morning?
See, the idea is that if you get that dip, you should try to go long. Now, on the long side, 8K miles is probably the biggest outperformer in IT. So that is a buy with a stop of 935, target of 980. Radico Khaitan is a buy with a stop of 282, target of 296. Balkrishna Industries is a buy with a stop of 2080, target of 2200. Jain Irrigation seems to be doing something different and maybe on a medium term chart as well. So this is a buy with a stop of 114, target of 126. And Axis Bank is a buy with a stop of 554, target of 580.
Okay, so all 5 buys for Ashwini. Sudarshan, good morning. You have 4 buys and 1 sell.
Well, yes, 4 buys, and the sell was just added to keep a little balance, that's all. The Godrej Industries had a deep correction. That correction is getting over. See, this market is giving us rotation repeatedly. Stocks that have corrected are now building basis and going up. Stocks that have gone up have a pause. So there is always an opportunity, just as NBFCs are now probably completing whatever decline they had. So Godrej Industries is a buying opportunity. A very attractive bullish head and shoulder is now in place. Then Equitas. Equitas has been a very dull stock, but a similar head and shoulder is coming in Equitas, a bullish one. It's not confirmed. We are still buying in anticipation. We are buying because similar basing patterns are available in all the NBFCs now. So apparently something is going on and we want to go and buy it now itself. The third buy is GMR Infrastructure. I mean, it's not usually a favorite for me, but a very large bullish pattern is now in the process of completing itself. It's not in the FNO. You have to pay cash to buy it, which is good, which means you can't overtrade. But it's worth buying and holding. I have a target, but the target could easily be exceeded if it starts moving up. So that's GMR for you. And PC Jewelers, lifetime new highs yesterday. That also in the process broke a 3-month range. There's more upside here. I'm more upbeat on PC Jewelers as a comparison than on Titan. Just to balance it, Indigo is a short sell. Short selling should be done only intraday.
Okay. Looks like you're also angry with Indigo. Well, let's actually talk about the real estate stocks. There is a report in the Business Standard, and I think confirmed by Manisha Natarajan, our real estate expert, that the tax department is looking to tax unsold inventory of realty companies. How serious can this blow be? We are going to ask Ghulam Zia, the Executive Director at Knight Frank, who has joined us on the phone line. Good morning, Ghulam. Good to have you with us. Is this going to be a very big blow, bringing down prices? Who are the likely parties that are affected?
Good morning, Latha. Yes, for sure. It's an industry which is in any case in a doldrum kind of situation with so many changes, regulatory and, a lot of the income tax related GSTs, etc. It was still weathering those blows. And if this is what is supposed to be the next one, then I can tell you that we have lots and lots of bloodshed ahead for the industry. And it already is reflecting even in a market like Mumbai, which was for a long time considered to be holding itself without giving any correction of prices to buyers.
Yeah,
yes.
Ghulam, Manisha told us, and, last week when I interviewed Mr. Deepak Parekh, the feeling I got was that it's only in the luxury segment that there is unsold inventory. Is that your analysis, or is it even in, even lower down?
Well, I won't agree to that completely. While I relate to it that most of the stock that's lying in the market is on the mid to upper segment. However, if I talk of luxury only in South Mumbai, it's a different matter. But then today, for last couple of years, real estate developers in Mumbai have created luxury everywhere. So I can't really take that except for South Mumbai, everything else is selling. That's not the case.
Sure,
so while luxury is worst hit, but then overall industry is still really good, passing through a really bad time.
But Ghulam, morning, Surbhi here. I think Manisha raised such an important point. Who's to say whether this is real hoarding, or whether it's simply that buyers are not coming? I mean, the developers can go back, take this to court, saying that, this wasn't willful. We are waiting for buyers. We're just not getting buyers. We're not hoarding. So a lot of grey here, isn't it?
Absolutely. There are two things I'll talk about. One, in favor of your argument that it's not clear as to whether it is a consumer who's not keen and coming forward to buy, and hence the inventories are ballooning. That's one possibility. However, something which we, at least in Maharashtra, have observed very clearly is that after Maharera has come in, the data is available with much more clarity. So before Maharera set in, we were looking hardly about 1.5 lakh of inventory. Suddenly we saw more than 2.5 to 3 lakh coming in after the definite data was in front of us. So the point I'm trying to drive across that for a long time we had this practice of hiding the data. And today with absolute reliable data available, a different perspective is emerging. So that's the argument I would put forth to say that it was always there. It was hoarded. It was there. And it is only coming up in the open after you have absolute clarity coming in as far as data points are concerned.
But they can still sneak out by saying that it is not unsold as much as unfinished inventory if they have not, for instance, got the OC, the occupation certificate.
Well, that's an argument which perhaps only in next couple of years will not be available, because all this while developers used to hold on to their completion and not take completion certificate as long as they were not comfortable with their sales and the inventories were not within their control. They used to take the occupation certificate. With that changing, with regulators coming in, they will be forced to take the certificates in due course of time as they had declared earlier. So with that happening, even that will not be available an excuse.
So now, Ghulam, just to boil this down to companies, I know you can't talk stocks or companies, but I mean, I'm going to still try with this. So we should watch out for some of the prime key NCR developers. Should we be wary of people who do luxury in Mumbai as well? I'm not taking names, but we all know whom we're discussing here. Mumbai luxury developers. What about the Bangalore market?
Well, if you take a macro picture and only focus on localities in general, I would say the most affected market is NCR, and I would rather be very wary of touching any developer from NCR region. On the other side, in stark contrast, Bangalore developers have always been doing well, very well, would I say, controls on their marketing and sales, etc., etc. And pretty clear in terms of the data points, etc. So I would rather be fine looking at Bangalore-based developers. However, Mumbai is somewhere in between. And as we are all aware, in last couple of years, half a decade for sure, if not more, Mumbai has been creating much of a luxury or high-end inventory without ever bothering whether there are enough buyers for that or not. So that is something which is obviously coming back to hurt the
So prices will fall, Gulam, in Mumbai?
Well, it is already falling. It's as I was talking about earlier, Mumbai was last man standing and already crumbling.
Okay.
You already see lots of price corrections happening in Mumbai markets, and with RERA coming in, it will obviously reflect in the data points as well, which will be undeniable.
I don't know. Maybe I hope you're right. Thank you very much, Gulam, for joining us. Prices always fall when you are selling. They always don't fall.
Gulam, always.
In Mumbai, there's anecdotal evidence of prices having fallen. Deals which were happening.
When you are selling, yes.
No. See, if you sit on the table with money, you will get good bargains. I think the best example is just see the hoardings. 90% hoardings are real estate. There's so much inventory, and developers are calling with so many offers.
Which is why I'm wondering why none of our technical experts have real estate stocks on their list. Well, first, Mitesh, you run us through your list, and then we'll come with more questions.
So I have all buy calls today with some mid-cap focus as well. The mid-cap 50 index has made a good swing breakout in a fresh high. The first stock though is from the banking side, that's Axis Bank. We had a buy yesterday as well. I think this is clearly heading towards levels of 585, good chances of it hitting those targets very soon. And now I would recommend a buy with a stop at 547. IDFC Limited had some good intraday signals yesterday, so that's a buy with a stop at 6180, look for targets close to about 67. A couple of mid-cap names. Century Ply gave a good swing breakout with volumes, so buy with a stop at 304, look for 336 as your short-term target. Similar pattern on charts of Imami Limited, that's a buy. Keep a stop at 1295, look for targets of 1400. And NTPC is showing some kind of continuation patterns on the upside. So I would buy this one with a stop below 182.5 for targets of 194.
Okay. Ashwani, you have been a bull on real estate, on stocks. Would you use the weakness to buy, or is there a different trade?
Well, I don't know what this means, because the tax was going to be paid anyway. So whenever that was sold, the tax would have been paid. But if it does create any sort of correction, I think you should buy it, because overall this cleaning up will only lead to fewer players being in the market, and again things moving from unorganized to organized, etc. So that way it remains a positive. So any sort of decline you should buy, but maybe wait for 2 to 3 days worth of decline, because all of these stocks have gone up fairly vertically. So maybe this can create a bit of 3 to 5 day type correction.
Well, let's take you to this big CNBC TV18 exclusive, which Ekta broke for us. We learned from sources that the US FDA has issued 7 observations to Glenmark Pharma's Buddy unit. Amay Chalke of HDFC Securities joins us on the phone line. Well, Amay, first up, how serious are these observations? I didn't notice any data integrity, but nevertheless.
Yeah, so you rightly mentioned that at least prima facie there isn't a data integrity issues which can be found out in these observations. However, first 2 observations looked very similar to the Lupin's observations when they had received this warning letter for their Goa facility. However, that doesn't mean that they will receive warning letter, because they have to respond it properly, basically.
Sure. Amay, we are not able to hear you very clearly. We will have to call you back in a minute on a clearer line. Maybe we should get to Manisha Gupta, who's waiting by, to give us the lowdown on all the commodity action. Good morning, Manisha.
Morning, Latha. Thank you so much for that. Well, there's so much cues coming in from the global markets that you need to keep an eye on. starting with the crude oil prices, and we have seen some profit taking on that. It has been weeks and months that you have seen a one-side single rally coming in for crude, but that has gotten into a bit of a profit taking. One, the commodity has been overbought, the net longs have been near record highs, and there are some statements from Russia, or rather their estimates of increase. That seems to be telling you that their resolve to continue to cut output going forward in 2018 is slightly uncertain there. So that is what the markets are reading into. Apart from that, we have been talking about on how the Trans-Canada pipeline into US has been shut because of some problems there. That is restarting today. So some a flow from Canada to US in sense of crude oil will start, and that's taken the premium off the prices as well. And the November 30th meeting, of course, Thursday is going to be most important before and after on how the markets react to their positions when it comes to crude. That is one thing, but the other one, of course, is metals, where you have seen buying come back. Most of the metals are headed for the best year in sense of gains in last 5 or 6 years. You have seen strong demand continue from China, even as the supply cuts in China are happening, not up to the pace that the markets were anticipating, but the Chinese imports have been increasing because of that, and that is supportive. And apart from that, you have seen decline in inventory. There are problems in mines in Chile and Peru, etc., and all of that is working its way in prices. And the weakness in US dollar, of course, works. So in Shanghai today, we have seen gold, silver, steel, iron ore, all of those commodities actually start with a strong day.
Okay, so all bull markets for you, Manisha. Thank you very much for joining us. Okay, we have got Amey Chalke reconnected with us. Amey, you were telling us how serious are these observations from the US FDA on Glenmark, failure to thoroughly review any unexplained discrepancy, lack of written procedures, complaint records are deficient, records not maintained so data can be reviewed at least annually. How serious are these?
So, as you have said previously also, that these are not related to data integrity as such. At least it is not coming out very clearly. However, most the first two observations, what I was saying, are related to, are looking very similar to the Lupin's observations, where they had received this warning letter in the Goa related to OS investigation, which they had not done properly, or related to the whole time studies. So, however, it does not mean that it will result into a warning letter. Glenmark has to respond this 483 properly, and if the US FDA is satisfied with their response, they can close this inspection.
Okay, Amey, that sounds fairly cautious. I mean, if it's similar to the Lupin letter, I take your caveat. Let's not get ahead of ourselves and think there'll be a warning letter. Having said that, stock still struggling around a 52-week low. What is your call now?
So we remain bullish on the stock, considering the valuation comfort we have, and considering the triggers Glenmark has in the near term, like the out-licensing opportunity they have for the derma product, which just clear the phase 2 and the proof of concept studies basically. So that cash flow can help them to reduce the debt, which could lead to a re-rating basically.
Okay. Well, we'll leave it at that. Thank you very much, Amey Chalke, for joining us with your thoughts this morning. We have now to analyze all the other cues that are coming in. Prakash Dewan of Altamount Capital has joined us. Good morning, Prakash. Just before you came in, we were discussing with a real estate expert whether this tax on unsold inventory will be a big negative. How are you looking at real estate stocks?
No, so I don't know whether this is fair and realistic. You know, it's like
buyers are going to say yes.
Governments have the right to move against cartelizing. So, you know, in the government interest, in the public interest, it may pass muster.
But to kind of construe this as cartelization, and let's say if there is lack of sales, okay, and you are a mid-sized developer, you've built a very good inventory, and there are no takers. Why would you be penalized for it? I mean, unless there have to be caveats like the pricing is of a particular nature that it kind of desists people from buying, and you're kind of waiting only for better realization. I mean, there have to be certain conditions. Just because somebody is not selling or somebody is not buying, you penalize the guy who's made it. Very few people will want to be in that business, and you know, at one side we are saying affordable housing is a big opportunity. In fact, it impacts a lot of the smaller players because affordable housing anyways has very thin margins. It's as compared to premium housing. And the biggies can continue to hold on, because they'll build only when they have pre-sales and things like that.
No, but fair point, Prakash, but that's the sense that we got from our discussion since morning, that it will be more the premium guys who get hit because there's not that much unsold inventory in affordable anyway. And also, I take your point. Let's see. I mean, a lot of holes can be punched into this argument that the government might put forward. But in terms of stocks now, given the rally, 100% move on a DLF, the kind of move that we've seen on, a lot of even the Mumbai-based stocks, what would you do? Buy, sell, hold?
Yes, of course, you would have to wait to see the reaction to this move, because there's no point jumping the gun. But my sense is the affordable housing segment is going to look even more promising. All said and done, we are saying it's getting more customer friendly, it's getting more viable. And the government is very clear that that's going to be a push that they will have to sustain till 2019 for sure. And in fact, last year, 31st December was the time they announced the whole subsidy scheme, subvention scheme. And if you see in terms of adaptation, it's not been very high. So they will have to take some very urgent steps to make it popular and make it happen. I would still look at affordable housing players. There are very few pure play affordable housing guys in the real estate side. All the good ones are premium. So we'll look at some of those. There are some new Bombay-based players which look promising at this point in time, because affordability makes a big difference in Bombay, in Bangalore. It's not something which is going to make sure in Indore or in Coimbatore or things like that.
Okay. Well, this morning we got a very big buy on a company called Talbros. In any case, let's take Talbros and the entire auto ancillary segment. What are your favorites there?
So Talbros, if you've seen the numbers, which exactly a week back they came up with their Q2 numbers, they looked so strong, so promising. And this is a series of companies that have qualitatively, very well placed in supplying key components to different segments of the auto industry, different nature of OEMs, like a GNA axle we've seen getting re-rated. We've seen Talbros follow the same kind of trajectory. One of the best picks there, Latha, I've been talking about has been Subros. So Subros is the one that you could probably still look at. It's had a mild run, but it's not like, participated yet in terms of what a Talbros has done or what a Endurance Tech or a GNA Axle has done. Of course, different segments that they cater to. We've been reading a lot of stuff on Motherson Sumi in the last couple of days. Motherson Sumi has seen a lot of buy calls and upgrades and all. So it very clearly shows that some of the stronger OEM suppliers to OEMs will continue to be in a sweet spot and enjoy good margins, good top line growth. The key change that's happening is from 1st Jan, the government might announce a compulsion to have truck cabs also being air conditioned. So every truck that gets sold, and not just a Volvo truck, will have a cabin that's air conditioned. So that's going to be a huge market opening up for the likes of Subros, which are into auto air conditioning.
Okay. Some interesting ideas there. By the way, the SGX Nifty is trying to show some signs of recovery. We are, about 8 minutes away from pre-open. So as we wait by for our first trades this morning, let's actually bring in an argument on what longer trading hours might mean for Indian investors. Here's a word from a conversation that Latha had with the NSE MD and CEO Vikram Limai.
When you look at the what happens globally, you don't really find cash markets trading 18 hours or 20 hours or whatever. They trade whatever 7-8 hours that they're supposed to trade. But the derivatives markets are open till much later, and even for 20 hours, 22 hours, 23 hours, in some markets even 24 hours. So my point is that today you're in a situation where your domestic investor after 3:30 has no opportunity to hedge any kind of event risk, whereas your foreign investor does, because you can at least hedge on an index basis. So my limited point is your domestic investor should not be any worse off than your foreign investor, and you should, at least from the principle of providing a level playing field, provide an index hedge to start with, if not anything else, so that you at least have some way of hedging event risk beyond 3:30.